I've said it before, this is a generational company in the making. And after the Q1 report yesterday, the earnings, and after listening to the conference call with some of you, man, I feel even more convicted that this is a generational company. And that's what we're going to talk about today on the PlantStock channel. And if we haven't met yet, my name is Jesse, and on this channel we focus on plant-based companies like the Tattoo Chef, Beyond Meat, the Very Good Food Company, to name a few. And if you want to get information regarding these companies, make sure to subscribe and don't forget that bell button. And before we get to it, I would really appreciate an early thumbs up because it does help spread the video to more people. Thank you, folks. I truly appreciate your help. Now, before we can discuss what kind of revenue they got for Q1, it's interesting to see what other analysts thought. So in Yahoo Finance, we have access to only two analysts as of yet, but this is basically their estimate. So on the low estimate, one of them thought it was going to be around $45 million in revenue for Q1, and the other one thought it was around 46. So I would say around 45 million. Well, folks, if you don't know it already, they were way off. Really low expectations. What we had was actually a staggering of almost $53 million. A 59% increase compared to the year prior, which was 33.2 million. And the special thing here, the most interesting part here is actually the tattoo branding product, right? It's the branded products that makes the difference when it comes to margins. Because when people go to a store, they're going to remember what kind of product, you know, the picture, the label, and everything, right? And it also makes it more possible for the company to control what kind of price they're going to have on it and what kind of margins they'll get. And they'll obviously get more when it comes to their branded products. And that's the really fun thing here. It was a record of 36 million, an increase of 105% compared to the year before. So this was truly amazing news. But before I continue, folks, let me know down in the comments, was this what you expected? What do you feel about this? Let's interact. But if we take a look at the gross profits, it was about 13.7 million, 26% gross margin, compared to the year before was 9.2 million, which was a 28% margin. So a bit of a decline. We'll talk about that as we move on, so stay tuned. Net loss about 8 million compared to the net income, which was 5.9 in the year prior. And adjusted EBITDA was about 3.0 million compared to the one from last year, which was 7. So when it comes to the net loss and adjusted EBITDA here, that's a bit lower, or quite a lot lower. It has to do, according to Stephanie Diekman, the new CFO, that it's operational efficiency, right? They put in a lot more money again to these different facilities in California, facilities in Italy. You know, they're expanding. So these things are to be expected. This is what you want to see in a growth company. And that's also something we're going to talk more about. So that's nothing to worry about if you're a long-term investor. And if we look at their balance sheet right now, we know that they had in February around $200 million. Now, as of March 31 of this year, it's about $185 million. But I don't think that factored in now the new facilities in New Mexico, which is going to be about $35 million. So I'm guessing they'll have about $150 million left. I guess we'll get more information about that. But still a pretty rock solid cash balance when it comes to a company that is still quite small. And then on the conference call, obviously they talked about the full year of 2021, which we know was revised. Formerly it was supposed to be around 222 million, and now it seems that they have adjusted it to about 235 to 242 million instead. But actually they talked about that too, that they haven't counted in the Karsten facility, right, in New Mexico, which they do expect might actually already start coming online now in Q3, Q4. So they said they're probably going to have to revise these numbers to even higher. So we'll have to wait for that, but that again sounds like excellent news. And I thought I'll share some more insights from the actual conference call. And the ones who were part of the live stream yesterday, thank you folks. It was really nice speaking with you live. And again, we're probably going to make more live streams like this soon, but I really appreciate you for taking the time. So if we start talking about a little what Sam Galletti, the CEO, talked about, he had really good news. I mean, besides the fact that they made a lot more money than we thought, 53 million in revenue for just 3 months. What I really found interesting is that when it comes to their branded products that's been selling extremely well now, they actually thought it would take 2 to 3 years to have the kind of revenues from the branded products that they have now. They thought it would take 2 to 3 years, yet they did it in 6 months. I mean, geez Louise, that really shows what kind of popular product this is, right? And he also highlighted that these are products now that aren't only sold to people in the Gen Z or millennials, which is their focus group. They've noticed that people of all generations, all kinds of people are buying their products. So it's not so strange that their revenues are flying up, right? And another thing that talked about that we've heard before is that when it comes to the 2 new facilities in New Mexico, they do expect to get another $200 million extra in the next 2 to 3 years from just those 2 facilities alone. So if we take a look at their revenue guidance and beyond, in 2022, they're talking about 300 million in revenue, and then in 2023, 2 years from now, 500 million. So $500 million. So could we expect another, around 600 to 700 million here? That seems plausible now, right? And then you're going to have to adjust this as well, probably pretty much. Maybe we could talk about 1.4 or 1.5, who knows? We'll see, but it's looking really good in that way. But another really exciting detail is the amount of stores that have their products in now in their different SKUs. If we take a look at in the end of 2020, they had them at total stores, their branded products then, about 4,200 stores, 4,300, and points of distribution, 23,000. Well, to compare, already now, from Q1, by the end of Q1 in March, they've actually extended this to about 6,000 stores. And amazingly enough, now it's around 31% or 31,000 in distribution points. So amazing numbers. I mean, in such a short time, in just 2-3 months more, they've gotten this up about 1,800 stores and about 8,000 new distribution points. And what do they expect from Q2? Well, by the end of Q2, in August, they expect this number to actually be up to about 7,200 stores in total and about 40,000 distribution points. Amazing. And again, so he's really convinced now. They feel really convinced about that they're going to have, by the end of the year, 10,000 stores in total by the end of 2021 and about 65,000 in distribution points. I mean, over 10,000 stores, that would actually give us more than 100% in growth in stores. That's amazing numbers just in 1 year. I'll tell you a secret. I think they could have way more than 10,000 stores, but don't tell anyone. And then what did the actual chef, his daughter, Sam Galletti, have to say? What kind of news did she bring? Well, apparently, by the end of Q1, now they have actually about 42 different SKUs. That's 42 different products. But by the end of Q2, now in August, they are expecting to have delivered about 50 or produced 54 different products, 54 different SKUs. That's including the 5 different SKUs that we talked about now just a couple of days ago, the family size versions, right? And she also mentioned, they have a really good and interesting deal with Target, and they are expanding their products there as well. It's about 17 SKUs now there. We do know that we'll expect a lot of sales from there. Apparently, they're doing super well in the frozen section. They're among the best products in Target's history when it comes to having a new frozen product that exploded up as much as this did. So we do expect a lot from there. And according to Sarah, we've heard about this before. They have she has, with her innovation ideas, about 250 ideas in her portfolio. And that's including 50 ideas for a Hispanic market. And we know there's a huge opportunity there. So folks, let me know down in the comments, what do you feel about all this news? Are you as excited as me? Because this, again, is super great news. Now, if we move on to the conclusion, maybe some of you are wondering, why isn't it flying to the moon now, considering all this great news? And I think we should know why, because we're entering a inflation. People are talking about hyperinflation. So people move out from stocks, from growth stocks to more value stocks. And that might mean that this company could suffer in the short term. And like we know, in times like this, volatile times, when there's fear of different things, fear wins out usually, which is a bad thing for the investors who sell off their stocks, but it's a great thing for us who are long-term investors. That makes it just a better opportunity for us to get in there and invest more and more at these great prices, which I do expect that we won't have in a half a year to a year from now. So make the best of what you have right now. Invest more, in my opinion. Again, I'm not a financial advisor, but I'm just saying this because this is what I'm going to be doing. And if you are afraid right now when it comes to the chef, that could be related to not having enough knowledge, right? Because conviction in a stock is based on knowledge, right? Knowledge is power when it comes to these things. So make sure to go back, read the different articles, see a couple more videos, but listen to the conference calls. Look at their economy, look at their vision, understand the company. Again, conviction is based on knowledge. So that's important that you make your due diligence. This is a generational company in the making. Listen to this.
We are building Tattooed Chef to be a generational brand. It is important we invest back into the business now to lay the foundation for future success.
So that's Sam Galletti, the CEO, stating the obvious basically. It takes sacrifices. It takes investing now, losing money to be able to become a much larger company in the future, a generational company. And remember, folks, this will be a B stock, meaning that it might probably give us dividends in the future. So if you're investing now, you might never have to sell this. In the next couple of weeks, I actually thought I would make several new videos on this company that will kind of prove why I believe it's a generational company. If anyone is interested in that, let me know down in the comments. So I still stand by my prediction for this company being a $120 to a $250 stock in the future in 5 to 10 years. If you haven't seen it, make sure to take a look up there. And it's the same thing when we talked about what kind of market cap we could expect from this company. It's about $1.3, $1.4 billion. I do expect it to be everything from 40 to 80 billions long term. That's another video you can take a look at over there. Folks, that was it for today. I truly hope you got some value from today's video. And if you did, make sure to smash that like button. And if you want to keep getting more information regarding Tattooed Chef or other plant-based companies, make sure to subscribe. And don't forget that ever important bell button. And as I think you're familiar with, this was not financial advice. These are just my own thoughts and opinions. Since I'm not a financial advisor, it's important to always do your own due diligence and invest safe. Have a really wonderful Thursday. Hope to see you soon. Peace out.